And I want to bring on Tom DeMark. He is the CEO and founder of DeMark Analytics. This is the guy who just started to map in 1928, 1929, and then he laid over the last 2 years here, and he found something that is really quite disturbing. They are almost identical. If you chart the Dow and what it's doing in 1928 to 29 in the crash, and what the Dow is doing now in the last 2 years, it shows that there should be, if it continues to chart this way, it would show that our 1929 Depression era crash happens in April. Tom is here. Tom, welcome to the program.
Thanks for inviting me.
I don't know what you believe about the economy, or where you've stood. I've been saying this is trouble for a long time. I don't know. Do you believe?
Well, Glenn, I've been involved in the investment business for close to 45 years.
Okay.
And I guess some people have called me a Pollyanna at times because I do have an optimistic bent. And but I'll tell you, the last 5-6 years have been troubling as far as my analytics. What we try to do here at our shop, and what we've accomplished, I think, fairly successfully, because we've been pretty well acknowledged in the institutional circles, is that we try to measure supply and demand, because that's what really drives prices. Fundamentals are long-term dictate moves in markets, but there's also a major component, which is sentiment. And extremes are met, at highs and lows. There's extreme optimism, extreme pessimism. So we try to measure those dynamics and then incorporate them into fundamentals. But what's happened in the last 5 years has really been troubling. What had worked in the past and seems to work globally. It works very well in the Far East, the Middle East, and our analysis there. But the domestic market here in the States, it's been troubling. It seems like there's an influence that seems to interfere every time we approach what appears to be a top in the market. At bottoms, our work works very well. But at tops, there seems to be some interference, and we don't know where it's coming from. There seems to be support in the market. And at about 5-6 years ago,
the Fed
we identified that as possibly being central banks, domain funds.
Right.
This is before it was common knowledge, and everybody was a disbeliever. Initially, it started with the Israelis were buying equities, and then the Irish and some of the central banks in these different markets were buying equities, which is really atypical behavior. And finally, it became common knowledge that the central banks were involved. And we just see this interference. It's tough to adjust at the tops, but the bottoms, like I said, are very comfortable with us. We're able to identify bottoms. Okay.
So you didn't set out to prove that, hey, a 1929 crash. If I'm
no.
Yeah, you stumbled into this.
Well, it's haphazard. I mean, what happened just by chance. What we did in 2007, 8, and 9, we took a segment of the Dow Jones average 1973, 74, 75, and 76, because I lived through that disaster. And I said, let's see how the two compare. And they were almost identical. The decline in 1973, 74 into the October and then December bottoms was identical to the October 2007 high and the subsequent bottoms in late 2008 and March 2009. And subsequently, the rallies has also conformed with almost perfect correlation for a number of years. Well, what we did the same study about 2 years ago. We said, let's use the S&P index, because that's more popular nowadays than the Dow Jones average. But let's also follow the Dow Jones plus European markets and compare it with 1929, for example. And all of a sudden, we received a red alert probably about a year ago that something was starting to correlate with 1929. And we followed it along, and then finally last summer, late in the summer, we showed it to a few people who were close to our business. I said, hey, take a look at this. And finally on October 9th, really October 7th, 8th, Business Week called us for an interview. And as an afterthought, we said, take a look at this chart. Let's see if the two periods behave similarly. And October 9th was the low of the stock market. And we said, if it is in fact identical, the move from August 9th, 1929 to the peak of September 3rd of the 1929 was 12.6%. Let's see if the same comparable move of 12.6% occurs. And lo and behold, 12.6%, 12.67% was accomplished for the Dow Jones average on December 31st. And then the S&P closing high on January 15th, it was also 12.65%.
Okay, so
it's amazing.
Okay, so now it doesn't. I mean, we're looking at the chart, and
Yes.
it is phenomenal. I mean, because it looks almost exact. So,
It really
but
is.
this
It really
doesn't.
does.
This
It's spooky, but the problem is, and I've been in the business so long, is that when things look alike and they seem to conform, they do until that point when a
They
person
stop.
wants to take action.
Right, right.
It fails.
So, okay, so, but what you're saying is the Fed is changing, or possibly the central markets. I think it's the central banks. I think it is the central banks. I think it's the government, the central banks, and the Fed, which makes things much worse in the end. But we could get to this point to where it starts to collapse and the Fed just dumps more money in. So it would stop it from being 1929, at least for another while.
Well, I put a finger in the dike, but you only got 10 fingers. That's
Yeah.
the problem. And the thing that we were marveled, and because we were invited on TV and appearances last
Yeah.
couple of weeks, there was a 23-day decline off of that peak in September 3rd of 1929. It bottomed, subsequently October 9th, or October 4th, I should say, of 1929, and that was comparable to the low last week. Now, we were on TV saying at the time, if the market were to adhere to a prerequisite, which we have as far as a price pattern, it could have unraveled last week. We didn't expect it to unravel. We expected to have that rally comparable off the October 4th, 1929 low, which is a 6-day rally. And we're currently in a 6-day rally right now.
Okay, so what do you see? Am I reading this right that you're saying that, I mean, again, you're not predicting this. What you're saying is if they continue to chart the same, we have the October 29 crash in April?
Well, no, we could have it. We could have had it last week, but like I said, there was a 10% chance. I announced that 10% chance that could happen. It probably won't, and the market will rally, and we have seen the rally now. Now, there's two scenarios currently. If the Dow Jones average closes above 16,000 next Monday and Tuesday, then there's a chance, yes, we could go down. And it could be something comparable to 1987. We're shifting things a little bit. Our two templates, 1929, 1987, are being adjusted. It's possible that could happen. But what's got to happen, we've got to have a trigger. And the trigger would be that we'd have to decline below, on the S&P average below 1762. We've been using that for some time. And, who knows if it's going to happen. It's so widely known right now, and we're a firm believer that markets bottom because the last seller, figuratively speaking, has sold, and we think a lot of people have sold based upon this comparison. So it may be premature right now, but ultimately, inevitably, it's going to happen.
Well, I will say this: a lot of really respected economists are now jumping onto this boat and saying that the next at least 18 months are going to be extraordinarily bad. What do you?
But you got to put into at least use some logic on this. If everybody is negative and everybody's sold,
I know.
Who's left to sell?
Got it.
And that's the problem. And usually, what happens before a sharp decline, you get a rally like we're getting right now.
What do you see? What do you see with gold?
Oh, gold. In June 28th of last year, the day of the low, we turned positive, and we were on TV in October, November. We predicted December 31st would be the day of the low, and in fact, it was. So we predicted a rally to 1308, and we should get to 1305, 1308 within the next week. And then we see if the stock market does decline, gold will make a lower low. And we're looking for something on the order 1260 to 1280. That's just below where the low was recently on December 31st. Then we see a really strong move in gold. Really strong. But I don't think it's quite ready yet. I think we've enjoyed this rally off of December 31st. We participated, but we're very close. 2-3 days, we could make a top.
Can you talk to me about one more thing, Tom, and then
Sure.
I'll let you go. I just want to know, a lot of people out there, they're like, I have a 401k. I'm not a big investor. I don't have money to do this. I'm not playing the market. What does this mean to me? What do I do as a regular person that doesn't have a stockbroker? What does this mean to me?
I'll tell you, it's difficult. In the past, over the past 45 years of my career, there's always havens. There's really no haven. There's no escape. And it's troubling. Interest rates are so low. For retirees, it's impossible. You want protection your wealth, whatever you accumulated, and it's difficult. And it's
how long have you felt this way, Tom? Is this a new thing for you? Because you said you've always been kind of they've called you Pollyanna about this. How long have you felt this way, that there's no haven?
Last 5-6 years.
Huh.
Isn't
that interesting?
We've identified the lows with no problem. It's just the highs. When we keep shooting at the market high and say it's probably going to sell off, it just doesn't do it. It recovers. It regenerates. It's almost like Jason in Halloween movies. It keeps coming back, and there's obviously some.
So when does the QE bubble burst? I mean, when's that QE infinity thing just like not work anymore?
I think it's going to topple of its own. There's this exhaustion point, and I think credibility. It's important. I mean, people believe, and they continue to buy, and a lot of people buy based upon default.
In the end, I'm a student of history. There's never been anybody who printed money and bought their own debt and everything else that survived. Never. And we're already you agree with that, right?
Definitely.
We're already seeing people on the streets in Turkey. They're starting to blame the United States when we backed off on QE for $5 billion. You're seeing it in Russia. The world is going to turn if we trash our dollar. What happens? Do we have, in the end, after a big crash, do you see a way out of this where we have a dollar that?
I don't see it. I think what we're seeing all the way up, bad is good as far as investors are concerned. The more bad news you see, the more inclined we are to believe the government's going to save us, and the market goes up. I think once we start seeing good news, I think that's the risk. I think by then everybody will take a deep breath and say, "Oh, we're here. The market's going to go higher." And I think that's when you have the potential risk of a decline.
Officially, our society is upside down with that statement.
Yeah, that is
like, we got to ruin it.
No, but it's true because they're going to have to stop. And this is what I said at the very beginning. I said, at the very beginning when they started pumping that money in, I said, how high do the interest rates have to go to suck that money back in? You will collapse the economy to suck that money, but you will. There's no way out. There's no way out.
There's no door. It really isn't.
That's fun.
But how long is it going to go on? It's anybody's guess.
Right.
It's going on.
But it could happen. But it could happen any day.
It could, but I think it's at least when you expect it. That's what's going to happen. There too many people were aware of what we were predicting in the relationship between the chart and 1929 last week. It was vulnerable at that time, but it required a certain price pattern, and it didn't exist. So we're getting this reflex move right now. A lot of people sold short last week, and they're being squeezed right now. And I think that once that dissipates, we do have the potential, maybe 3-4 days from now, of topping.
Okay, thank you very much, Tom.
Well, thank you.
I'm just trying.
I want you to go back to being Pollyanna.
Yes, please. I'm trying to think what that course. He's been like this for 5 years. I'm trying to think what that corresponds with. Was it the reunion tour of DeBarge or
El DeBarge?
El DeBarge
did a solo thing.
Yeah, and maybe that's what turned.
Here's
around.
another one.